The most anticipated earnings releases for the week of November 6, 2023, presented by Earnings Whispers. If you enjoyed all the earnings news last week, then you might love this week, because there are even more scheduled to report, with around 1,200 companies on the calendar. There will be a shift from larger cap stocks to smaller cap stocks, which tends to mean more inconsistency and bigger moves. Sentiment from a bottom-up view, meaning on an individual company basis, improved as the stock market rebounded last week. But traders are still more bearish than bullish on the companies scheduled to report earnings this week, though they lean bullish on the construction and consumer discretionary names. There are more than 150 companies kicking off the week on Monday, with most interest in Realty Income and NXP Semiconductors. Investors are bearish both names, but while they are unrelated, they both made reversals last week ahead of earnings. It is unusual during earnings season for the busiest day of the week for earnings releases to be on a Tuesday. Usually the number edges higher throughout the week until a peak on Thursday, but this week there are 350 companies reporting on Tuesday. Uber is the top of the list and the stock appears poised to hit new highs, as long as it doesn't disappoint. The chart for Celsius is a little weaker, but it has filled the gap from its last earnings release, retested it a second time, and is now appearing to head back to its highs again. The company announced a 3-for-1 stock split last week, and it would be unusual for management to do so if they thought their stock was going lower on its own with a coming catalyst. Yet investors still don't believe in the story and are bearish ahead of the news. Most of the interest this week is in AMC Entertainment, which reports after the close on Wednesday. As the stock sold off in August, investors became more bullish, which is unusual, but after all, this is a Taylor Swift story this quarter. Meanwhile, sentiment has reached a level of bearishness in Disney ahead of earnings that has edged out the pandemic levels and also the 2022 levels. This time around, though, the bearishness seems to be carrying over into analysts' estimates too, which have now been slashed to a level that appears beatable. On Thursday, we will get results from Plug Power. You have to go back to early 2021 to find the last green arrow on the chart, representing positive earnings. And few people expect that to change this quarter. When it does change, however, there is now a record number of people on the other side, so a large rally could ensue. But that is a wait-and-see story. Shares of Unity have hit $25 multiple times this year, but each time it proceeded to hit a higher high. Here we are again at the $25 level, and until shown otherwise, this is support. There isn't a lot of interest in those reporting on Friday, with the exception coming after the close. Shares of StoneCo have spent most of their time over the past 2 years below $13, and despite this once nearing a $100 handle in 2021, nearly all the volume over the past 5 years has been around $13 too. Meanwhile, earnings bottomed in early 2022 and have been trending higher, including upward revisions since the last earnings release, even as the stock moved lower. Eventually, if earnings continue higher, the stock will break out of this range and begin trending with its earnings. For now, though, investors aren't buying it. Despite the drop in the VIX last week, volatility is elevated for a number of names this week. One standout is Desktop Metal, which missed estimates last quarter and subsequently sold off to a new all-time low. The company has tracked poorly during the quarter as well, but it doesn't have a lot of analyst coverage.
Shh.